Good morning, everyone. Today is Wednesday, January 14th, 2026. How many of you are still writing out 2025 on your checks, on your documents? Because I still am. But I haven't done a little market update in a while, going over the tickers, the indices, and where the money is flowing into and out of. And it's been very, very interesting start to 2026. So let's dive right in. The S&P 500, I like to use the SPY ETF for that, is having a really hard time getting above 690. So for the past 3 days, we have started the day at 690, pushed up to 695, and failed. And now you can see pre-market here at the top right of my screen. The market is back right at 690. The NASDAQ QQQ is also in a really tight channel here between 590 and 630. And we got a doji star yesterday, which is just a day of buyers and sellers fighting. This last candlestick here, this red one, is what you call a doji star. And again, it just signals that buyers and sellers can't really make up their mind on which direction to go. And since it's red, I'm not surprised that the market is gapping down. Russell 2000. This usually goes up when interest rates go down, and that's exactly what it's doing. So very, very interesting. But the most interesting ETF slash commodity is silver and gold. Silver gapping up again to all-time highs. These red lines on my chart were previous resistance and breakout zone. And if you know anything about technical analysis, this little dip, let me see if I can highlight it. No, I can't. Okay, in between these red lines, it looks like a coffee cup. It's called a cup and handle pattern. It's one of the strongest breakout patterns in the market that I've ever seen. And it's been going straight up since then. Gold also gapping up at all-time highs. I recommend that you follow Peter Schiff online. Gold made another cup and handle not long ago. So it's gapping up big again, and that is a little concerning. I've never seen any commodity or any ETF really launch into the stratosphere like this. I just got off the phone with someone who lives in New York, and she's telling me she pays $12 for coffee. I don't know if that's inflation or stupidity, but it's very concerning because out here in the country, I ain't paying no $12 for coffee. I just jump in the lake and wake my ass up. But technology also in a very tight consolidation. This follows along with the NASDAQ. Can't really get above 150 here. What we're seeing is, I'm not super worried, but what I think is going on is just a massive rebalancing. So we just went over the indices. Now let's go into the individual sectors of the economy. And I want to point out first XLP. This is the Consumer Staples ETF. This is products like your safety net, Coca-Cola, sorry, Colgate, brush your teeth, Procter and Gamble, so on and so forth. These are the safety names. And for all of 2025, while tech was ripping, the Consumer Staples Index just consolidated and then went down. And now it seems like there's a massive rebalancing going on. For 4 days straight, XLP has gone higher, and very, very solid green days. So a lot of money flowing into the Consumer Staples ETF and names. Also, one that's really pushing is XLE. Can we break out of $47? Can we break out of $47? That is the number here. Lots of resistance above 47. And today, we're gapping up to $47.38. So I want to see it close multiple days above 47. It's only attempted it 3 times back in 2024 and 2025. I think the world needs a lot more energy, especially if AI is what it's hyped up to be. So I'm watching the energy sector very closely. If you follow along my monthly paycheck portfolio, XLEI is my largest holding. Another one ETF sector I'm watching is XLRE, the real estate sector. Jerome Powell just came online claiming that the DOJ is sending him a lawsuit. They're really getting after his ass, and he kind of is too late, Powell. I mean, remember COVID when it took his ass forever to raise rates? Now, there's 12 people that sit on the board of the Federal Reserve. So it's not all his fault, but he is the leader and he definitely has a lot of influence. So the lower rates go, the higher I expect XLRE to go. I'm watching XLRE very, very closely. Can we break out above 41? Yesterday we got really close. Can we close above 41? I've got an alert set here. We're above the green line, which is the 20-day moving average. Healthcare nailed the bottom on that. If you watched my video over summer, XLF getting shot. I mean, everyone's freaking out about credit cards and the interest rate they charge, and I'm kind of with Trump on this one. Like, why are they charging 20%? I don't really give a shit about flight points or cash back. Get after them, you know. Maybe we shouldn't be borrowing so much money. Have you guys ever thought about that? Maybe we shouldn't lend people who aren't financially responsible so much money. They don't need a $15,000 credit limit. They need to learn how to manage their finances. So get after them. That's my opinion. Whatever. XLY, consumer discretionary. Tesla really pushing this one higher. Communications. Utilities. Where are we at here? Let's go to utilities. One that's really blasting off is the industrial sector, XLI. So keep watch on that one. And obviously materials, XLB, with gold and silver and commodities shooting higher. XLU closing above the 20-day. We can go into individual companies, and when we go here, what I want to highlight, I haven't looked at Coca-Cola in a while. Let's look at it. Yeah, it's blasting off because it's part of XLP, okay? I bet CVX is going up. There we go. I bet Visa is going down. Boom, look at that. Wow, wow. You know why? Because that's in XLF. I want to show you Lowe's and Home Depot. Those are probably two of the prettiest charts. Sherwin-Williams we can look at. Yeah, Sherwin-Williams blasting off. Lockheed Martin really going higher than the F-35. Colgate, people are still brushing their teeth. Home Depot, here we go. Look at this chart. Look at this. Just straight up after 350. Right at support. I mean, it bounced off of 330 perfectly. Lowe's bounced off of 220 perfectly. See, this is why I think it's so important to watch charts. There is a huge disconnect between the company and its stock price. And sometimes, for no reason, the stock price gets sick, even though the company is doing fine. I've gone to Lowe's almost every day in 2025, and yeah, I just thought it was really funny that back in November and December when I was going to Lowe's, the stock price was getting slammed, and yet Lowe's was packed. So it's very important to keep flicking through these tickers. This is not personal financial advice. This is just for informational purposes only. There's no guarantee. All these companies could go to zero. My name is Luke Fenwick. I'm an investment advisor representative for the firm that I started, and we're just talking about tickers. We're just going over information. So have a great day. Let's get it in 2026.